Hi everybody, for Day Trading Demystified, it's Brian. Welcome to our site, daytradingdemystified.com. We're doing a short video to go along with our breakout watch list. We're going to show you how to make money at the open and hopefully profit by it. So this video is about playing the open. Now I used to refer to this as when pigs get slaughtered, because a lot of people get greedy and try to make money on fast moves in the first 20 to 40 minutes of the market, and a lot of them get slaughtered. Sometimes you get lucky. There is the system, there is a method for making money at the open. This is going to be a pretty short video, hopefully, to go along with the watch lists that we update. I'm going to use the example from September 20th, 2013, AVGO, the 52-week breakout. Let's have a look at it. Now, if you look here carefully, you're going to see a stock that is a 1-week chart. Now, this stock was a 1-week, 3-year chart. You can see here, 1 week, and this big chart you're seeing, every candle you're looking at here represents just over a week. This goes back about 3 years. Now you're looking for a very clean and clear point to trade this stock. You're looking for a stock that's breaking to a new high from an area of consolidation. Stocks that are breaking into a large gap area also work on this strategy. Now you're going to see here we have 3 yellow dots. This is what we call a triple top. So this stock had tried on 3 separate occasions to get over $39 and change. And of course, we're looking for it to clear that in a clean breakout, which of course this stock did on this day. So let's go over a couple quick things here. You're looking for stocks that have a clear area of resistance. Now, when a stock gets to this area, you put them on a watch list. Now, like I said, I think I work harder than a lot of traders. So if you don't want to be scanning the stock market every night for 2 hours looking for breakout stocks, you can check daytradingdemystified.com. Every day we update our breakout watch list at least twice a week. It's completely free. I'm just going to show you how to do the strategy and hopefully help you make some money. So again, this is a 1-week, 3-year chart. Every candle representing 1 week. Now the time frame can always be different. Sometimes you're only looking at a 3-month, 1-day chart. The length of the chart or the time period isn't so much as relevant as looking for a clean breakout to a new high. Now a stock can be 80 cents and breaking to a new high after 4 years of $1, or it can be like this, where it's breaking out over $40 after not being able to do so in years. So you're watching the stock right here. This is what happened. Now let's see how we got to that point. So the first candle of the day, the opening 5-minute candle, right there. Now this is exactly what you are looking for. You're looking for a nice big candle that breaks out. Now we want to have another look at this long-term chart quickly so you can see that the candle I just showed you is just forming above these highs. And it's doing this, I guess you could almost call that a 4-point breakout, but I don't count 2 days, so that's still a triple top there. So what we're looking for again, well, you're looking for a stock that clears those 3 previous highs, and you're looking for a 5-minute time period that has abnormal volume and closes near the high of the day. Now we're going to have a look at both charts here so you can have a better understanding and follow along. On my platform I can see multiple time frames. So this is the first candle of the day. And right here is where the stock closed yesterday. So all of this is representing right in here. So you can clearly see that this candle here and this first 5-minute candle, which is only to about here at this point, is a really, really good breakout. So on this first candle, after a clean breakout, what are we looking for? Well, we need to make sure there's very little to no gap between where it closed and where it opened. Now, sometimes you can get a pretty good gap if it's a pennant or a flag, something I go into in some of our other videos. But for playing the open on a 52-week breakout or breaking into a gap area, we generally want to see as little gap as possible. The less of a gap there is, the more likely it is to keep going up. And of course, the larger the gap, the more likely it is to stall. I know a lot of people try to play stocks where there's an area of consolidation and the stock opens gapped up $5 the next day. 9 times out of 10, those will inevitably stall. So for this 52-week breakout, again, you're looking here, here, And here, the 1 week, every candle representing a week, this 5-minute candle breaking out right here, breaking out from all of this. Little to no gap. Now, if this had gapped up 50 cents or $1, you can still play it. I'm just trying to say that the less gap there is, the better off you are. Now, the candle should close strong with little to no wick, meaning, obviously, you want a green candle closing near the high. Now, when these candles give some back, it generally means that there's some question as to how sure people are that this breakout is going to work. I know people try to get in on this strategy when they see stocks going up quickly. They jump in before the 5-minute candle closes, and a lot of times you get burned. So this is just confirmation, and again, skewering the probabilities in our favor. So we've got the clean breakout on this 5-minute candle, almost no gap, closing near the high. What else do we need to see? Like I said, candle should close strong with little to no wick. So we're waiting for the first 5-minute period to close. Now, after that happens, you should also be checking your platform to see if this stock is rising on the breakout on abnormal volume. So when this 5-minute candle is closing, if it represents 240,000 shares and your platform shows that the average daily volume is only 600,000, as an example, you're already looking at a third of the volume on one 5-minute candle. You can use that to do a couple quick calculations to determine that this stock is in fact breaking out on abnormal volume. A lot of times the volume will already be higher than it would be for a normal day just on the opening candle. I can check normal and current volume on my platform. If you can't do that on yours, I would strongly recommend changing platforms. So what do we do next? Well, we buy on the close of the candle, and again, only if it closes strong. So how do we control our risk here? Well, first of all, if you've watched some of the other videos, you know what to do. Having done that, you place your stop at the last point of clear support or just below the open of the candle. So what we're looking at here is right down in this area. Now, if this area was to be breached, it would be a strong indication that the breakout is likely to fail. Now, if that was to happen, if the stock did roll over and die, it's quite simple. You haven't gone too heavy. You take a small loss and you move on. If you follow the rules I've shown you, I found that 8 times out of 10, this strategy works quite nicely. And as you can see, this did as well. This is what I do every day in the stock market. This is Brian for Day Trading Demystified. Master yourself and then master the markets. If you want to know how to stay in any kind of 52-week or opening breakout trade longer, as well as learn the many other numerous trading strategies I've developed over the last 5 years, make sure to check out our trading education series under courses on the Day Trading Demystified website. Trade well and have a good day, everybody.